There's been some dramatic days in the market recently. What's going on?
There's two driving factors. There's the geopolitical risk, the issues with Russia and the Ukraine. For us and for markets, there's also the expectation of interest rate rises because of the high levels of inflation.
What impact on the market would these events have if they actually transpired?
If they did transpire, clearly, firstly, it's a tragedy. Any armed conflict, loss of life is needless and is not great at all. However, a lot of what we think about, and we don't mean to sound too mercenary here, is does it have an impact on corporate profits? Ultimately, that's what we're buying when we invest in the stock market. And if we take a medium to long-term view, we're relatively confident that the global economy can survive and see through potential armed conflict. Having said that, of course, issues like energy prices and the impact on inflation, that's something we'll be keeping a very close eye on.
So what do Becketts plan to do now?
Echoing what James has said, we don't generally react to geopolitics. It's very difficult. It's even more volatile than the stock market. So we'll be keeping an eye on what happens and looking for opportunity in the investment markets there. However, on the inflation side and the effects on the portfolios, we've been talking about this for over 12 months. So we've already made some adjustments in terms of the equity holdings that we have, bring in some value investments, and alongside that, just looked at our fixed income, the duration on those investments to make sure they're as protected as they can be, whilst also staying diversified.
And do you see this volatility set to continue?
I think we do. Yeah, I think the market is, the economy, the global economy is reaching a new phase of the cycle. An analogy that I heard recently that I will steal is that the global economy has been a patient and it's been in critical care. It's been in enforced coma to a certain extent during certain periods. Strong medicine has been administered to the patient to create some stimulus, and now that patient's starting to recover. And so that stimulus can be taken away, but it's got to be managed in the right way and signposted in the right way. And that is going to continue to create volatility in the investment markets over the next 12 to 18 months and beyond.
And just on that point, volatility in markets isn't always bad. It provides opportunity for managers to be able to get hold of the assets they want. So it's not all bad, it's just a bumpy ride.
Thank you very much.
Thank you.